Ever wondered how the world of Bitcoin ETFs compares with that of traditional ETFs? That's what we're about to dive into. Exchange-traded funds, or ETFs as they're more commonly known, are investment funds traded on stock exchanges, much like individual stocks. They're designed to track the performance of a specific index, sector, commodity, or asset. Traditional ETFs have been a mainstay of the investment world for years, offering investors a way to gain exposure to a wide array of assets without having to buy each one individually. Now imagine taking this concept and applying it to Bitcoin, the world's most well-known cryptocurrency. That's essentially what a Bitcoin ETF is. It's a fund that tracks the price of Bitcoin, allowing investors to buy into the fund and, by extension, Bitcoin itself, without having to go through the process of buying and storing Bitcoin directly. In essence, both traditional ETFs and Bitcoin ETFs serve the same purpose. They offer a more accessible way for investors to gain exposure to a specific asset or group of assets. But while they may seem similar on the surface, there are some key differences that set Bitcoin ETFs apart from their traditional counterparts. Firstly, Bitcoin ETFs are based on a digital asset. Unlike traditional ETFs, which are usually tied to physical commodities or established markets, Bitcoin ETFs track the value of a cryptocurrency, an asset class that is inherently more volatile and unpredictable. Secondly, while traditional ETFs have been around for decades, Bitcoin ETFs are relatively new. The regulatory environment for Bitcoin ETFs is also less established, leading to a higher degree of uncertainty when it comes to these funds. So, how do these differences impact you as an investor? Well, the digital nature of Bitcoin ETFs means that they can be subject to cyber threats, something that isn't typically a concern with traditional ETFs. The relative newness of Bitcoin ETFs and the less established regulatory environment also means that these funds can be subject to greater volatility. But despite these potential risks, Bitcoin ETFs also offer unique opportunities. They provide a way for investors to gain exposure to the world of cryptocurrencies without having to navigate the often complex world of crypto exchanges. In recent news, the financial world has been disrupted by the approval of the Bitcoin Spot ETF, marking a new era in the cryptocurrency market. For those unfamiliar, a spot ETF is an exchange-traded fund that tracks the price of Bitcoin in the spot market, where cryptocurrencies are bought and sold for immediate delivery. This differs from traditional ETFs, which often track a basket of stocks or other assets. The approval has sent ripples through the crypto market, as it signifies a step towards mainstream acceptance of cryptocurrencies. It has not only increased the accessibility of Bitcoin to a broader range of investors, but also added a layer of regulation and transparency to the previously unregulated market. This development could have a significant impact on the price of Bitcoin in 2024. While it's impossible to predict with certainty, many industry experts believe that the increased accessibility and legitimacy brought by the spot ETF could potentially lead to a significant upside in the Bitcoin price. This recent development is a testament to the evolving landscape of investment options. As always, stay informed and make decisions based on your risk tolerance and financial goals. In the next scene, we'll wrap up the video. Stay tuned. To summarize, Bitcoin ETFs, like traditional ETFs, offer a way for investors to gain exposure to a specific asset. However, Bitcoin ETFs are based on a digital asset, making them inherently different from traditional ETFs, which are often tied to physical commodities or a basket of stocks. They are subject to unique risks and opportunities, and their regulatory environment is less established. The recent approval of the Bitcoin Spot ETF has shown that the landscape of investment options is rapidly evolving, with more opportunities for investors to dip their toes into the cryptocurrency market. This development could have a significant impact on the future of Bitcoin and other cryptocurrencies. It's crucial to understand these differences, weigh the potential risks and rewards, and make informed decisions in this new investment landscape. That wraps up our discussion on Bitcoin ETFs. Until next time, stay curious, stay informed, and do your own research before investing.